Hi, Adam Khoo here, and in this video I'll be looking at a market update, what's happening to the markets right now in the US and in Asia, as well as answering this question, do I see this bull market continuing all the way into 2021? So before that, a quick look at this disclaimer. Alright, so during my last market update, that was before the US elections. As you know, my prediction was for Biden to win. And at the time, the market was still on an uptrend. And I said, regardless of who wins, the market will rally higher to the end of the year. But in the meantime, we may see some volatility, some choppiness in the markets. So at that time, it was somewhere around here. That's right. So the market was on an uptrend and did a healthy retracement. Found support at 3234, went up and found that previous swing highest resistance, came back down again and retested that very strong support. That was previous resistance. So at the time, the elections were coming, so a bit of uncertainty. Election day was the 3rd of November, which was this day, and it was still uncertain who was a clear winner, but the moment it was clear that Biden had won, and there was no more uncertainty, the market started rallying very strongly, as you can see. Now, of course, besides the US elections and the transition, now Biden is going through this transition to be the next president. Besides that, we had some game-changing news that a vaccine has been developed by Pfizer and Moderna to be 90 to 95% effective. So the combined news with new president, vaccine has driven the markets now to a new all-time high. You can see initially the market rallied and it created a bearish pin bar at this previous resistance, as you can see. So there were some traders who were thinking, hey, this looks like a double top, it's a bearish pin, it's going to go back down. But I knew that no, we're not going down, right? Because of the year-end rally, new president, vaccine, all the very powerful fundamentals in the market is going to drive the market higher. So sure enough, there was a fake out for the short sellers, and boom, now we're again at all-time highs. And what's really interesting about this pattern, again, if you see this previous resistance, once it broke, it now became a strong level of support, and we've bounced off that support, and as of now, we're on a very clear uptrend. Looks like we're heading all the way up, at least to the end of the year for now. I still remember that before the elections, Trump was saying that if I lose and Biden wins, Sleepy Joe wins, the market is going to crash. And of course, that didn't happen, right? And there were some people who believed that, and what they did was they shorted the market. Once they found out that Trump was losing, and when they shorted the markets went up, they lost a lot of money. Now, the same thing happened 4 years ago, when people said if Trump wins, the market will crash. And when Trump won, people shorted the market and died as well. So the lesson to learn is never trade based on the news that you read, because there's no way to predict how the market will react to the news. No one can predict how markets react to news. The important thing as an investor and as a trader is to not attempt to outsmart the market or predict the market, is to follow the market. In other words, the trend is your friend. As long as the market is on a clear uptrend, higher highs, higher lows, moving averages sloping upwards, you see a sequence of moving averages from the smallest to the biggest moving average. When you're on a clear uptrend, you follow the trend. Uptrend, you go long. Downtrend, you may want to go short. So never go against the trend, never bet against the trend. So you can see that the market has been on an uptrend all the way since early April of this year. It's been a very strong uptrend. Again, an uptrend is something objective. You can see the moving averages in a clear sequence, the 50 moving average above the 150 moving average, and the price above the 200 moving average. Moving averages sloping up, clear uptrend, you stay long in the markets. So sure enough, I stayed long. I told my students, I said, stay long, keep buying. Whenever you see a retracement, buy good companies, and you will see your portfolio grow towards the end of the year. And here we are, okay? Now, what's interesting is that it's not just the S&P 500 that's up or the NASDAQ that's up, but the Dow Jones has hit a new milestone. That's right, the Dow Jones has hit 30,000 points for the first time in history, a new milestone. So the next stock, 40,000 points. So again, here's the Dow Jones. And again, the price action of the Dow Jones, very similar to the S&P 500. We had that initial low that was made. This was a previous support and attempted to rally, could not reach the high in the case of the Dow Jones, came back down, did what we call a forced double bottom. If you have listened to Alson Chu's seminar on the webinar, he talked about market manipulation by market makers. It's pure market manipulation where market makers force the price down just below the previous low to take out the stop losses. We call that a forced double bottom. Once retail traders or investors have been forced out of their positions, they're forced to sell, right? Big institutions, market makers like and me, all right, we start to buy and then we see the market going up from there. Now, why is it significant that the Dow Jones is going up right now? Reason is this. Ever since the crash bottomed in late of March, the initial rally that we saw was driven by only a handful of companies. So in other words, out of the 500 companies in the S&P 500, not all the 500 companies really went up. Less than 10 of them were the ones going up and pulling the rest along. These were the MAGA stocks: Microsoft, Alphabet, Microsoft, Apple, Alphabet/Google, Amazon, and Facebook. The COVID-proof stay-at-home stocks or tech stocks were the ones driving the market. But the rest of the companies were not going up. Banks were going down. Restaurants were going down. Hotels were going down. Energy was going down. So the rally was not broad-based. It was not really a very comprehensive rally. But what has happened is ever since the vaccine news was announced, now the financial stocks have started rallying, rebounding. Financial stocks, airline stocks, hotel stocks, industrial stocks have been rebounding in anticipation that now with the vaccine, in the next 6 to 9 months, we're going to go back close to pre-COVID normalcy. Well, as close as possible at least, right? Where people can now travel around freely, borders will be reopened with that vaccine. And because of that optimism, now the Dow has gone higher. Remember, the difference is this. The NASDAQ and S&P 500 are made up of a lot of tech stocks, whereas the Dow Jones is made up more of financial and industrial stocks. So the Dow has been lagging the S&P and NASDAQ for the first 3 quarters of the year. But now the Dow is catching up. The Dow has rebounded very strongly, with again the banks rebounding strongly, industrials like Boeing rebounding, 3M rebounding, the airlines rebounding. So that has propelled the Dow to 30,000 points. So year to date, let's take a look. Year to date, you can see the S&P 500. Let me just go to the year to date time frame. Okay, there we are. So we started the year over here in January, and we had that big crash in February because of the COVID pandemic running wild, and markets bottomed in late March, early April. The bull run started, which I said in the YouTube video earlier on, but some people did not believe that, right? And sure enough, since then we have been in this huge rally. So as of now, S&P 500 is up about 12% year to date. So one of the most important things as investors is this. If you simply buy the Dow Jones or S&P ETF, you just buy the ETF, you will get 12% a year. No brainer, right? But if you know how to pick the best companies within the market and you time your entries by buying them when they're undervalued and on good support levels, you can beat the market. So my students and I, every single year, our focus is on beating the market. So this year, very proud to say that, yep, I have beaten the market as usual. I've been doing it every single year. So you can see one of my portfolios I'm managing over here, right? So this is the 1 month up 12.9% year to date. Let me click year to date. You can see I'm up 49% year to date on this account. So that's beating the market index. My other account, which I'm managing as well, this one. Yep. So you can see month is up 13%, and year to date, this account is up 55%. All right. So really happy that beating the market again this year, and even more happy for all my students who have been following my strategies and following the community. All of them have beaten the market as well. Some of their sharings, we've got Evelyn from Singapore, and she said, hi Adam, I'm very glad that in less than 1 year of investing, she's a newbie, my portfolio is currently up 27.82% and beating the S&P 500's ass. Right? I love that. And we have got Ahmad Farah. Hi Adam, wanted to thank you for all your teaching and guidance. I'm up 200%, 204% year to date despite the COVID situation, investing in the right stocks. We've got Emil Henson. Hi Adam, I don't even know how to begin. I'm up 90.71% return year to date on my Interactive Brokers account. Your teachings are invaluable. Never in my wildest dreams thought this was possible, right? It is possible once you follow the right strategies of investing and trading. We've got some of my students turbocharging with options as well. This Tony, I ordered Adam's option course 3 months ago. He and Bam Bam, that's a nickname for my partner, made it simple but very thorough. Absolutely love you sharing such common sense and research details in all your trades. Blah, blah, blah. This guy is 72 years old. I'm 72 years old and have more than doubled my account in 8 months, something I only dreamed of. You see, I tried to trade on my own for a year back in the 1980s and took 15 grand and it went to zero. All right. So again, you're never too old to learn at 72. Why not? And the past does not predict the future. It doesn't matter how much money you lost in the past. What matters is what you do right now. If you take action right now with the right strategies, you can, greatly build up your portfolio. This is another gentleman. Happy Thanksgiving, Adam. I'm writing to express my heartfelt gratitude for being the most influential teacher, blah, 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 blah. Thank you very much. This month, I continue to generate profits of $150,000 in trading, all from options. My trading account shows 90 grand in profits and 60 grand in another account. You have changed my life since I joined your classes. Thank you so much for being my guru. And we have got another gentleman over here. I became truly active in the markets at the start of the pandemic. He only started this year. I've now seen for myself the results of following your teachings on focusing solely on taking up positions on great businesses out there. Even my stockbroker friends are scratching their heads when they see my whole list of green in my portfolio. Because a lot of people lost money this year. A lot of people, they saw their wealth go down. But my students are all seeing green, their wealth going up in this portfolio. And people are wondering, how do they do it? Do they have like a crystal ball magic formula? It's a lot of common sense. It's buying great businesses at huge discounts and timing your entries. This Mustafa, very inspiring message he sent. He said over here, thanks Adam so much for the December premium report. He said, I just joined the UIP and took the VMI course 10 days ago and started rebuilding my portfolio. I got out of some bad positions I had bought at an insanely high value, way above the intrinsic value. My portfolio was down 6% for the past 2 months because of poor diversification. Now I started building it up again, rearranging my stocks, and he says, now I'm almost recovered my losses and up with a small profit as of today. And you can see from his charts, right, lost a lot of money and for the first time seeing green in his portfolio. So again, remember, if you have lost money in the past, don't blame people, don't blame your luck, don't blame the broker, don't blame Trump, don't blame Biden. Take responsibility. It's because of your decisions and strategies. And when you change it, when you take ownership of your portfolio, you start to turn it all around. And here's one last one. This is from Gilberto, right? He said, I made some mistakes blowing up my account. I was down 32% initially took your course and now for the year up 38.59%. So again, doesn't matter where you were. What matters is what you do right now to rebuild your portfolio. So, it's not just me who can do it, but my students are all beating the market as well, even those who are newbies who are losing money in the past, and you can too. So let's get back to the initial question. Markets are up 12% for the year. Can this bull run continue into 2021? Do I see higher gains in the following years to come? Let's take a look at this. Now, there are many people out there who believe that the stock market is crazily expensive right now and the market is detached from reality. After all, the economy is in a crapper. People are losing their jobs. Businesses are going bust. Politically, it's still a mess. But the stock market keeps going higher and higher. So these people are saying, hey, the market's in a bubble like back during the dot-com days in the year 2000 and we're going to crash. It's going to be a big crash because the market is insane right now. And these bears have been calling for this crash every year for the last 10 years. So I don't know about that, right? So is the market too expensive right now? Is it detached from reality? Well, if you use the traditional way to measure market valuation, it seems crazy expensive. And the traditional way is to look at PE ratio of the index, the price to earnings ratio of the S&P 500. So you take share price of all the companies, the market capitalization, divided by the normalized earnings. So the higher the PE, the more expensive the market is. Now, here's something interesting. Right now, currently, the PE ratio of the S&P 500 based on normalized earnings is 38.39, okay? Which is at an all-time high. And if you look at the last 20 years, the average PE ratio has been 21 times. The lowest 9 times and the highest was just a couple of days ago at 38.96 times. So in other words, yes, based on PE ratio, we are way above the historical average of 21 times. It looks really expensive on the surface. Having said that, I believe that we can't use old ways of valuation on today's market because it's a different world right now. Interest rates are near zero and will continue to be near zero for at least the next 2 years. The Federal Reserve has printed money like no tomorrow, so there's a lot of liquidity in the market. So if you ask me, do I think the stock market's price right now is justified? Yes, I think it is justified. Now, let me just put it this way. I don't think the market's cheap. It is definitely not cheap. But I would say it's not insanely expensive as well. It is justifiable, but it is slightly expensive. Now, why is it justifiable? You have to look at it in the context of interest rates. Now, interest rates, again, are near zero. Now, what happens when interest rates are near zero? See, the way you value a business is based on the present value of all the future cash flow that can be generated from the business. Now, the way we discount future cash flow to present value is using a discount rate. Now, the discount rate is based on interest rates plus the market risk premium, right? So when interest rates are very low, the discount rate is lower, and hence the way you value future cash flows are higher. So in other words, low interest rates increases the valuation of businesses. That's number one. Number two, with interest rates so low, what does it mean? It means that people can borrow money a lot easier. Borrow money to invest, borrow money to spend. Businesses can also borrow money almost for free right now and invest. So all this creates more growth in the markets. Now, whether the stock market is expensive or cheap is also relative to alternative forms of investment. So when people say the stock market is expensive, I ask them, compared to what, right? I'm going to show you in a short while that if you compare the stock market to the bond market, stocks are cheaper than bonds. And if you compare the stock market to holding cash, the stock market gives you better returns than holding cash. So if you compare stocks to cash or bonds, stocks are actually cheap because they're the only game in town that's sustainably profitable. And let's take a look at it right now. So here are 5 reasons why I believe the stock market bull run could just be getting started and could continue all the way into 2021. Reason number 1 is a very simple reason. It's a technical reason. The market is on an uptrend, and the trend is always your friend. As long as the market's on an uptrend, the probability is that prices will continue to move higher until the trend reverses. And again, no one can predict when the trend will reverse, but as long as the market's on an uptrend, the path of least resistance is we're going up, and we're going to continue to go up. Let's take a closer look at the charts. And once again, how do you define an uptrend? An uptrend is defined as the price making higher highs and higher lows. Number 1. Number 2, you can define an uptrend by the moving averages. When you see the moving averages in sequence from the smallest to the biggest moving average, we're on an uptrend, right? So you can see that's the 50 moving average, 50 above 100 moving average, above 150, above 200. So they are in sequence and they are sloping upwards. So it's a confirmed uptrend. Now, remember again, uptrend doesn't mean that the price will go up every day, every week. On an uptrend, prices go up and down in a wave pattern. Remember the wave patterns? Wave up, wave down, wave up, wave down. So although it's an uptrend, we could still see some retracements along the way. So expect that to happen, right? In fact, you can see the pattern right here. Wave up, wave down, wave up, wave down, wave up, wave down, wave up, right? So eventually, it's going to hit the top of that wave, is going to wave down, and is then going to wave up and continue the trend, okay? So if you're not already in the market, I don't suggest jumping in and chasing that wave up. As investors, I like to get in during a wave down, right? So at this point, when it waves down to a support level, that's when you add shares. Wave down to a support level, that's when you add shares. So right now, I will not add shares yet. Again, I'm going to wait for a wave down to a support level to then add shares. So always wait for a wave down. Remember that. Never chase the girl. Let the girl run into your arms. Now, if you take a look at this, again, this is a previous resistance that has become support. So, all right, we may want to wait for a retracement back to at least this level of support. Now, if you zoom out into weekly candles, let me now look at weekly candles. Again, you can see those wave patterns, and the market does look slightly overbought in the short term, right? Where again, you see this wave up, wave down, wave up, wave down. Now it's waving up. So it's currently a bit overbought, like breathing out. You can't breathe out forever. You're going to run off air. You wait for it to breathe in before you take a position before the next wave up. All right, so generally, like I said, the trend is up. Don't fight the trend. Follow the trend as long as the trend lasts. The second reason why this bull market could still last for some time is because we just finished a bear market in February this year, and we just started a new bull market. If you want to catch my latest videos, click on the subscribe button right now. Click on the bell so you get instant notifications once I upload my latest video. If you want to check out my online courses, go to piranhaprofits.com. We're going to learn how to invest and how to trade the financial markets and create an income from all around the world. If you want to join my live Wealth Academy program, go on to wealthacademyglobal.com and find out more about how you can learn investing and trading live online. This is Adam Khoo, and may the markets be with you.